What's up, guys? Colin Bauman here, and thanks for tuning in to today's show. On today's show, I brought in my friend Sam Jones. He's with Vitality Capital Management, and they're a financial planning firm that partners and teams up with real estate investors. So Sam, tell us a little bit about yourself.
Oh yeah, thanks for having me. It's fun to come on the show. I've seen it a couple times, and it's fun to finally be on. But anyways, we ultimately help real estate investors to maximize their returns, their real estate returns. A lot of times financial advisors, and I'm sure you've been pitched by one, about getting into the market or getting into one of their products. They're just trying to sell you. But we understand that most real estate investors, if they're serious about real estate investing, can far outperform the market. And so we'll help investors to do that essentially.
Can you believe that a financial planner is admitting that real estate will outperform the market? Like, it's amazing. And many of you know that I worked for Fidelity, and I was on that original career path, and I was like, I was going to be a financial planner, right? That was what I wanted to do. And I left and became a real estate agent, helping people buy and sell homes. And the reason I left is because as a financial planner, that world is very much like he's describing. Like, they're pushing insurance products and managed accounts and fee-based accounts. And I'm not saying that those aren't right for everybody, but there can be a conflict of interest. And for me, I know I could outperform the market through real estate, just like Sam said. And so it's hard for me to get behind a product that I didn't believe in for my own money.
Yeah, and I just want to say this too, like with those products and those things, we do utilize them, but we understand that your real estate's your best investment.
Sure.
And so we'll utilize those products to be as short-term reserves, or we'll utilize those products to save a ton on taxes and actually get more into your real estate investments. Those are kind of how we utilize some of those and help people to get more into their best investment.
That's cool. And basically, like what Sam's saying is he removes the conflict of interest of trying to make money off of fee-based things and saying like, hey, we're just whatever's best for you as an investor. Let's look at everything that we can use and use it to maximize your end goal, which is a rate of return.
Totally.
It's amazing, right? Like, I didn't know that they existed, but it is amazing to have them with us and to be able to help investors like us out. And so, yeah, truly amazing. So let's actually talk about this. So an investor walks in to your office and meets with you. How is that going to go? Like, they're going to show you a portfolio of their properties.
Yeah.
What's your approach?
I mean, initially we're going to analyze their properties and we're going to look at the different metrics. I'll go into that in a sec, but then we'll also utilize some of those accounts to be like a reserve portfolio where they have money if emergencies come up or if they need repairs or things like that. And we'll help them really optimize their taxes. But going further into what we'll do to analyze, we look at 5 metrics, and I'm sure you're familiar with some of these. We look at cap rate, we look at cash on cash return, we look at internal rate of return, so that's like analyzing the property's return over time. And then we look at internal rate of return after tax, because really what matters is what you're taking home.
Sure.
And then we'll look really closely at return on equity and return on asset.
Cool. So they're gonna look at all 5 of those calculations and help an investor maximize their portfolio wisely.
Yep.
And so one of the cool things is me and actually Sam are gonna team up. We're going to do a 5-part video series. We're going to break down each one of these calculations for you so that, if you're looking at your own properties and you need to, do a little bit of an investment analysis or a portfolio analysis, like you can do that using these calculations. We're going to teach you how to use them. The
other thing I think we'll talk about, and maybe we'll make another video about this, is leverage particularly. And like a lot of people, this is just an investment principle in general, but when you want to increase your returns, you have to increase the amount of risk you're taking on.
Sure.
And so we help, our real estate investors to manage that risk, but to increase that risk through leverage to increase those overall returns.
And it's funny you say that because I see real estate investors and I just think the pendulum swings with them. Right, and you see people like Dave Ramsey who says, hey, don't ever buy an investment property without paying 100% cash for it, which is stupid because you'd never buy, a 5.5-6%, rate of return where you have to manage tenants and update properties and go put money in the market, right?
Yeah. And what Colin means by that is if you look at the internal rate of return of a property over time, over a long period of time, just averages, you're looking at anywhere from a 5.5 to a 6.25% return. And Colin's saying, like, that's a ton of work to put in when you're managing tenants and you're running a property. It's just a lot of work. And so the way that you outperform dramatically is through using leverage and getting those high returns through that.
Exactly. And I think it's cool that leverage just has to be managed, right? Like, you don't want to fly to the wall, and if something hits the fan, then all of a sudden you're going to lose your portfolio.
Yeah.
And you don't want to be on the completely other end of leverage where you have no rate of return because you're getting a 5.5-6% and you're doing a ton of work.
Totally.
And so you have to run it like a business.
Yeah.
And you have to look at your portfolio like a business and say, how do we generate the most profit out of this business?
Yeah.
And leverage is a huge piece of that. So I love that you guys actually dive into that with your investors.
Totally. And I think a lot of people are sold on real estate and this passive income.
Sure.
And these huge returns, but really where the real returns come from is from using that leverage and managing those properties in a way that you're utilizing that. And that takes a ton of work.
Yeah.
And so I'm just super clear with the real estate investors that we work with that if you do want to outperform, and you definitely can, it's going to take work.
Yeah, and it does. It does. It is very much running a business. It's not just throwing money in an index fund, which you can do. People do it.
Yeah.
But if you want to become an exponential and step up your game and get real returns, it's gonna require more work than that.
Totally.
But yeah, so we're excited for this 5-part series. We're gonna release one each day over the course of the next 5 days.
Yeah.
And we hope it adds a ton of value to you guys. Until next time.